All right, welcome everyone. Good afternoon or good morning for those of you still on the West Coast. Thank you for again joining our bi-weekly webinar series called Energy Storage at PNNL. And in this series, what we're trying to do is explore some of the different research that's going on at the lab that's impacting the role of energy storage, both in the grid and transportation as we move forward with that. So we are happy to be joined today by Mark Willey, who's going to be talking about supply chain issues there, especially related to lithium-ion batteries. And one of the reasons that we're obviously interested in that supply chain, we've seen tremendous disruptions over the last few years. But as we look forward, especially as PNNL is going to be home to the new grid storage launch pad that's coming up here, and which is aimed at developing those new technologies that can really impact long duration energy storage for the grid. We're going to be faced with similar supply chain issues as have been seen in lithium-ion. So the lessons that we can learn from this, and apply to grid scale energy storage are going to be critical for the development of these new technologies. So before I get into introducing Mark, I did want to give a couple notes here. One, please put your questions into the chat. We will aggregate those, and then at the end of Mark's presentation, we will pull those into a question and answer period that I will moderate. And then, so keep putting those in the chat if you have questions. Secondly, we typically provide a recording of this event to the public. We don't typically provide slides. If there's something you need in the slides, reach out to us and we can see what we can do to accommodate. But Laura will place a link here where you can see recordings of, in a couple of days, you'll see a recording of this event and then also past webinars that we have. So with that, I'll do a quick intro of Mark. Mark recently joined PNNL following a 17-year career in private industry in the fields of process control, semiconductor capital equipment, and most recently, semiconductor and battery materials manufacturing. He was vice president at Moses Lake Industries and founded and led their battery materials business unit, which developed novel materials for non-EV US lithium battery producers. Mark holds a PhD in chemical engineering from Columbia University, where he focused on electrochemical deposition and modeling. He is also a graduate of Harvard University's program for leadership development. So Mark, thank you very much for joining us today. Looking forward to your talk, and I will let you take it away. Thank you.
Yeah, thanks a lot, Vince. Appreciate the introduction and look forward to talking to you all today. I'm going to specifically keep, hopefully, the presentation a little bit shorter so we can have more of a discussion at the end. I really think it's beneficial to get these ideas flowing between myself and the audience, and then have people asking questions and have the discussion. I also wanted to make two quick comments while I share my screen. Let me get my presentation up here. And we should be good there. Can you see are we all go to the presentation, Vince?
Sorry, I had to unmute. Yes.
No problem. Okay, great. So first of all, I wanted to say the title I actually changed from the original title to be North America as opposed to United States. I think most of the audience hopefully understands that the ramp of manufacturing from cell production and materials production for lithium-ion, lithium metal batteries is not just going to happen in the United States. It's going to be supported through Mexico and also in large part through Canada. So this talk will go through the issues that really challenge the North America area. The two other points I wanted to make before I start the talk was this is really a very brief summary of a report that's around 90 pages now that we're going to be putting out, that talks about the materials production processes, the companies in that space, and also the challenges that these companies are having. And that report will be published by PNNL in probably the November timeframe. And we're going to have that report as probably as a report posted on the PNNL website where we update it on a regular basis. And we wanted to do that because the market here is so dynamic. I mean, I can't keep the numbers in my slides up to date on the materials manufacturing and cell manufacturing announcements that are going on. Everything is happening so fast. We want to make sure that we include regular updates for that. The other thing I wanted to say was I will be at the battery show next week in Michigan. And so if you're going to be there, feel free to send me an email. We can take some time to talk, or you'll find me wandering around the hallways there or at the trade show desks there. Okay, so let's get into the actual talk. So first, just an overview. So this is going to be similar to some of the other talks I've given. Some of you might have seen them, but we're going to go through the battery market and the way I see it, how it plays out in North America. Then we're going to go through the challenges, some of the, I'm only going to take a few of the challenges with the time I have and talk about challenges for materials manufacturing in North America. And then if we have time, we'll go through some of the PNNL activities that are happening that support not just lithium, but also other battery development and supply chain analysis. Okay, so the market. So today what we're going to do is we're going to talk about a certain part of this market. And this slide here really shows the full supply chain overview of the lithium battery supply chain. The starting of it obviously is with the raw materials and the mining. And then obviously those materials get mined and then brought to the midstream manufacturers that then convert those materials into goods that are used in the downstream cell manufacturing, and then finally into the packs and the modules that go into electric vehicles or these different areas. Most of my research and analysis over this last year is really in this midstream manufacturing, and I think is also one of the most important parts for the United States and North America in terms of ramping support and bringing supply chains back, because as we all know, the mines are where they are. The raw material is limited by where it actually can be pulled out of the earth. And what we can do to mitigate some of the supply chain risk is bring the other steps that are upstream of the mining back to the United States and North America so that we can have less interruptions, less business continuity issues. I'll go into it in more detail later, but really the big risk for the United States is not necessarily in the cell and the module or car production. I think most of you have seen the announcements over the last year, and I just talked about how many are coming out each week. But most of those announcements focus on building electric vehicles and batteries for those vehicles. So there's a lot of money being dumped into that area of the market. The key issue is that where are the materials coming from that support the cell and the car manufacturing and also the other device manufacturing? And I think that's really one of the risks we have in the United States. In North America. So I've shown this slide many times, but I just want to make it clear that when we talk about the lithium-ion, lithium metal market, you're really talking about two different markets. You're talking about electric vehicles, and that includes, light-duty trucks and cars. And then you're talking about all these other, what I would consider, what I've said in the past is niche, but just smaller markets, sub-markets that are not involved with electric vehicles. And these are areas such as defense support, energy storage devices, space, power tools, trucks, consumer electronics, and some of these other sub-markets. I think trucks is an interesting one. Heavy duty and medium duty trucks is an area where the United States actually has some big players in terms of producers, and also I think it's an interesting area for some new developments on these larger format batteries. But the main point here is that for the market, if you're making electric vehicles and you need support for cell manufacturing, you really only have a few different types of batteries you're looking at for those cars or trucks. If you go over to these other markets, these are smaller cell producers, smaller markets that are within these spaces, and they require many different diverse batteries and cells to be produced for them. If we take, for example, the defense industry uses many, I think thousands of different battery types and has different specifications depending on the temperature or the conditions that they're being used in. This leads to a very different market in terms of size and support apparatus for these, for this side, the non-EV side and the electric vehicle side. And it's important to understand that the companies that play in these two areas often have different business strategies. So if we look at the two different areas, we just think about North America production, and we look at the current 2022 production. These numbers are very rough. Like I said before, every day I feel like I'm getting more companies put into the equations for these. But really in 2022, we've got a non-EV market that's really less than 10 gigawatt hours per year compared to the larger EV market, which is 53 gigawatt hours per year. Oh, and sorry for this mistype here. I think the key here to understand is the growth. Okay, so the growth is just going to be huge in the electric vehicle area in 2030. And as most of you know, or have seen, a lot of this is coming from push from the automakers in the United States. And yeah, you just, like I said, I just even last 2 weeks, there have been announcements from, I think, Toyota and Honda of other electric vehicle and cell manufacturing facilities coming online. But the point here is that even in 2030, this other non-EV market is going to be much smaller than the electric vehicle market. And again, this really sets up a different market space for the materials manufacturing and the risk of this smaller market versus the larger electric vehicle market. You can imagine if you're a materials supplier and you're supplying to a non-EV space versus an EV space, the requirements and the margins that you can get off your products are very different in this space where you're supplying much less material at higher margins usually than in the electric vehicle industry where you're supplying millions of kgs of material for one or two different types of battery formats. So that play, I think, is a key one to understand and just to have in the back of your head, which is that the companies that actually support these two industries often have different business models. Okay, so who are the companies? When we talk about these non-EV and EV battery markets, we actually have quite a number of cell producers in the United States. It's just that they're very small compared to the larger cell producers that have been started in Asia and now are starting to move over for the electric vehicle space. So if you look at the United States, a lot of the support in the past has really been for, I would say, defense and these other smaller areas. And you also see, I've kind of got this split up a little bit, but you also see that the non-EV cell producers, you see a lot of startups within the United States that are getting into the game for new technology. And so I think that's one of our other strengths in the United States is having these newer technologies supported for hopefully building this kind of next generation of cell production at the larger scale that's needed to support the electric vehicle market. When you look at the cell producers on the EV side, the current layout, and again, this is, I would say, this is probably out of date already, but the current layout for cell producers that are involved for vehicles is much different than this non-EV space. And you see a lot of the cell producers here are large Asian firms that have come over to support the OEMs, the big OEMs in the United States, and also obviously Tesla and some of the other newer car manufacturers. But the main point I wanted to make here is one is that the majority of the EV cell producers is not from US companies, it's coming from Asian producers, although as I think some of you know, there's been a lot of joint ventures created to support these OEMs such as Ultium Cells or Blue SK. Again, joint ventures like this one with Ford, that's an SK Ford joint venture. You've got Stellantis joint venturing with Samsung to support their cell production. Ultium Cells is a joint venture with LG. So you've got a lot of these joint ventures coming up to support the OEMs, as well as just the true Asian suppliers to the automakers. Tesla is really the unique one here so far, although again, with the JVs, the larger OEMs are getting into cell production, but Tesla obviously has been working in this area longer and has vertically integrated their supply and now is making their own batteries for their electric vehicles. So we just talked about this a little bit. I know this slide, there's a lot of small print on it, but I just wanted to point out here the huge investment coming on the cell and the OEM side specifically. And we'll talk about the material side as well in a minute. But I mean, it's just, again, I can't say it enough. It's crazy to see how much from the private sector is being dumped into this market right now to support the ramp of electric vehicles. These are just some of the announcements. I couldn't even fit all the announcements that are coming out. But the main point here is that there's, I put greater than 85 billion. I'm sure that number is much smaller than the real number, but this 85 billion or more being spent on cell production and electric vehicle production in the United States is just enormous. So I say here aggressive investment from both cell and the OEMs. Okay, so for the materials discussion, I just wanted to quickly set up the discussion by just going through what materials are used or needed for lithium-ion batteries or lithium batteries in general. And to do that, I needed to put this picture together to show what the materials or sections of the batteries are. So within the battery, and this, I'm just going to give a general overview of a lithium-ion battery. You've got a current collector on the anode side. You've got an active material, which is made up of multiple different materials, submaterials. You've got an electrolyte that allows these ions, these lithium ions, to flow through during discharge. You've got a separator that keeps the anode and the cathode apart. And then you've got the cathode active material on the cathode side and the current collector. And so with these different components, there's a lot of raw materials that go into these different components. And when we talk about materials manufacturing, I just want everybody to understand that when we're talking about that, we're really talking about the actual midstream chemicals that are produced to actually make into these formats within the battery. And the question is, I put this down here, which is what's going on right now in terms of materials manufacturing in North America. So again, this is a slide I often put up, changed it a little bit, but I think in order to understand what's going on in America, you have to look at these different subcomponents. And so again, for the anode electrolyte separator, the cathode, and I've also got recycling on here, there actually is a significant amount of companies operating in this space with production sites within the United States and North America. The issue is really not the lack of companies that necessarily manufacture, although we would obviously like more companies. It's really the size of the production that's needed to support the electric vehicle industry that's the issue. So a lot of these companies are large companies, but the actual manufacturing facilities in North America are much smaller than is needed to support, like I said, the millions of kilograms of material needed for these different sections of the battery. I'd say, one of the positive things here when I look at the materials market is the emergence of a lot of these startups in the recycling area. And I highlighted this on this slide. And not all of these are necessarily startups, but I think this is an interesting space that we've actually had some strength in North America. And specifically, it's been interesting to watch companies like Ascend or Redwood or a bunch of these other companies become really not recycling companies, but materials companies. So these companies are going beyond just taking lithium-ion batteries or materials and recycling them, but actually churning them into finished goods that can then go into cell manufacturing, or even starting actual production of parts of the cells. Redwood Materials is a good example of a company that's, I believe started out as a recycling company, but that has really expanded into anode manufacturing, copper foil manufacturing, and also cathode production. And so a lot of these companies, and I think most of them would say this, is that they're not just a recycling company, they're actually materials manufacturers. And so I think this is one of the key areas that's going to be interesting to watch over the next few years as we look for materials production in the US. Again, the main point here is just production right now is too small. So what do we do about that? Just some other discussions on volumes of money that's going into the markets. We talked earlier about the electric vehicle and OEMs putting lots of money in. On the private and the public side, in terms of materials manufacturing, you do see money coming into that market within North America. I'll talk first about this bipartisan infrastructure bill. There was $7 billion, I think that most of you know, that was allocated well, $3 billion of it, which is being allocated right now for the investment in the supply chain, and specifically not necessarily for the cell and the kind of the car manufacturing, but the upstream side of it to support the bringing up materials and equipment and that side. You've also had a lot of companies, and I highlighted just a few of them on here. Again, this is just a subset of news releases that I could find of companies coming in and saying they're going to invest in battery materials production within North America. Although when you look at the money being invested, again, it's really a much smaller amount of money than what's going into the cell and the OEM production. And so one of the areas that we have to think about is how do we increase this investment? How do we make it easier for companies to manufacture materials and products for cell and the OEMs within the United States? And I basically just say, is the investment enough here in North America? I think most of us would agree that right now it's not, and that we have to figure out how to do that. Okay, so the bulk here I want to talk about is the challenges. And this really comes from, I don't think I mentioned this at the beginning, but really comes from, I'd say, over 200 discussions with different materials manufacturers within North America, not just materials, but cell manufacturers, equipment. And we also talked to a bunch of the cell and OEMs about the challenges of making materials in North America. So again, this is really a subset of the challenges, but I'll go through a few of these. There's two different types of challenges I'm showing here. I've highlighted a few of these in red in terms of materials manufacturing challenges. And these red ones are ones I'm going to just touch on in the next few slides and talk about more. I'll quickly go through some of the challenges that are here in black or darker font. And these challenges, I will not go into detail, but again, just quickly, just going through these other ones that I'm not going to talk about. One of the big challenges, if you're a materials manufacturer and you're trying to ramp production, you're trying to understand, how can I make this capital investment? How can I have it make sense financially for the company? And how can I de-risk it? And a lot of that comes down to trying to get offtake agreements with either the non-EV or EV cell manufacturers, so that you can have a long-term supply of material that's guaranteed, or at least somewhat de-risked for the lifespan of that factory. And that's a huge challenge that's happening right now with the materials manufacturers. Pricing expectations. We're not talking about high margin usually in terms of materials. These are all very price sensitive materials. The battery costs have to come down further for more of the North American, and to be frank, the global community to adopt electric vehicles and other electric devices. If you talk to a cell manufacturer and they start to bring up manufacturing of materials for one cell technology, one of the huge risks there is what happens if that technology changes. We know there's a lot of new technologies coming in for batteries and materials. What happens if you just built a plant that's made for one of the older ones and now it's not going to be used? That's a huge risk for a material supplier. That kind of goes to the product life cycle. Another area is, how do we compete in North America with some of the practices that go on for materials production in other parts of the world? How do we make it a place where if we require restrictions on environmental and workforce, which we should in terms, I shouldn't even say restrictions, if we have good practice in those areas, how do we make it a fair competition if companies are coming from overseas and not having to uphold to that? So those are some of the other areas that I wanted to just bring up here, but we're going to go into capital investment, workforce, lead times, how to ramp manufacturing, and the current raw material challenges. So first, just to set the stage here, I pulled this from one of the reports on, it's I think an older report, 2021, from manufacturing in the United States versus China. I think most of us understand this challenge, which is that China, a lot of the production for electrification for batteries happened not in the United States over the last 20 years, but actually happened in China and other Asian entities. And so what we're left at right now is that even on the cell manufacturing, like I said, is coming up. We're bringing that up, I'd say, in force. But on the upstream side for cathode, anode materials, separators, electrolytes, you can see the percentage of U.S. manufacturing versus even just China here is dramatically smaller. And so the question we want to keep on asking ourselves is, how do we actually increase this amount or this percentage, or at least make less risk of us having supply disruptions in this area? And I just also wanted to point out that, again, as you move upstream in the material supply chain, as you go from the actual cells to the midstream materials to the raw materials, the actual story gets worse and worse in terms of companies operating in North America. Okay, so one of the first big challenges here, capital investment. So this slide's got too many words on it, so I'll walk you through it. But one of the big things here I wanted to make a point of was when we talk about, and I'm going to go through cell production here and some of the numbers, so we kind of set the stage. But when we talk about building gigafactories, and we talk about how can we get more U.S. companies involved in building those factories, or companies that have been in the area for at least some time now in North America. If we look at some of the players in this area, companies like EnerSys, Eagle Pitcher, Navitas, Lithium-Ion, these are much smaller companies than the Asian players that are in the same cell production area. So if we look at, let's just take EnerSys because it seems to be the biggest or the bigger of the ones I'm showing here. This is a significant company, $2.9 billion of revenue in 2021 with greater than 9,000 employees. But if you're going to go build a gigafactory, you're looking at investing in the billions of dollars range, right? We're talking, basically $1 billion per 10 gigawatt hours per year for production. And so this example is really just talking about the cell production, but it's really a bigger discussion that I'm going to talk about a little bit more on the material side, which is the actual support of materials for these companies at also becomes a large investment for materials producers. So we talk about $1 billion to support a cell production facility. If you're going to support electrolyte at this size, again, you're talking, tens, maybe hundreds of millions of kgs of material you need to supply. That means huge investment upfront on capital equipment to build the factory. So if you're a company on the order of less than 1,000 people, maybe your revenue's in the tens of millions or hundreds of millions. I think one of the biggest challenges we have is that the current state of companies don't have the ability to invest or invest in a low risk or lower risk situation to support the materials here, or even the cells in this case. And so again, a lot of the things you see, or a lot of the companies you see building the EV production sites, again, are LG, SK, and Panasonic. Some of the companies like Tesla, who obviously have grown dramatically over the years, are building their own cell production. I think that's one area that has shown some maybe some opportunities for more manufacturing materials, is that these electric vehicle or OEMs are starting to vertically integrate, not just Tesla, obviously. I showed you the joint ventures with Ford and Stellantis and GM, and they're starting to vertically integrate throughout the supply chain as well, going beyond just the cell production, but going up into the material supply chain. So I think that's one area where if the capital investment is needed, I think we might be able to get some more traction as the OEMs start to support more of that upstream capital investment. Again, just quickly on the material side, and this is mostly focused on the cell side, obviously from the numbers and from the companies up here, but I think we also have to think about the materials that are going into these batteries need to be cost competitive, right? These batteries are still too expensive, not too expensive, but still have a high price point and still need a reduction in cost. We need to think about, okay, why is there no materials manufacturing? Well, again, if you're a company in North America and you want to ramp North America production, you have to put up significant capital. And to do that in North America often means, okay, well, if you're a startup and you've got a new material and you're trying to produce it, it means you have to entice venture capital or other private entities to support that. And traditionally, North America hasn't been a place where venture capitalists have really wanted to do manufacturing because of the huge risk in capital equipment and materials that I've talked about. The low margins and lifetime of the facilities is another huge problem for manufacturing in North America. We're talking, low margins on these materials. So how can a company justify 10 or 15 or 20-year production site if the market is so dynamic like it is right now? So these are just some of the challenges for really the capital investment. So I touched on this a bit. Oops, sorry. I already touched on this a bit in terms of ramping manufacturing, but I've used this slide before, and I think it's a good example of discussing the challenges on the manufacturing of materials versus that of cell production. And so if you've got battery cells that are being produced in in North America, everything's coming up for the 2024, 2025 timeframe, it appears. A lot of the announcements you see today are companies wanting to produce these cars or batteries in that timeframe. So then the question is, okay, so if that's going to happen, so what about upstream from them? What if you're a materials manufacturer and you're trying to understand, can you hit a timeline of that to manufacture materials in the United States? How would you do that? And I think this slide addresses that, or at least addresses that challenge, which is that it's not easy, and I don't think it's going to be something that we can do within North America until the late 2030s. And that's specifically because a lot of the materials production requires a number of years to even get the facility up and running, and requires, like we talked about before, high capital investment and high risk initially. So even if you make the decision as a material supplier that you're going to produce materials, and you make that today, or you made it last year, it's going to take you, let's say, 7 years or 5 years, best case scenario, to get that plant up and running. And then you have to make sure you qualify the materials for the cell production. So not even after you get through your ramping of the manufacturing, you got to qualify it. And then you have to run the plant for a certain amount of years, right? I put greater than 10 years to make a profit. This is just from my past experience on return on investment for these plants. But I think the big picture here is, for all the cell manufacturing coming up right now, and if you ask yourself, why is there no U.S. Or why is there little U.S. materials being put into those cell producing facilities? It's the fact that we just can't ramp the production facilities fast enough to capture that business. And the supply chains for those factories, for those cell factories, they're having to scramble to find who can actually do that. And the people that can do that are the people that have already set up manufacturing already, which has mostly been the Asian materials producers. So I think for 2025 cell production, we're still going to struggle to have a significant impact on materials support there. I think our opportunity really is in this next wave of cell production and qualification that happens in the late 2020s. Quickly going into lead times. So I think most of you that have been obviously in the business of manufacturing for the last few years have seen dramatic issues with trying to get materials and equipment, even if you decide to start a production plant. So if we go back to my previous example of, you've made the decision, you're going to bring up a manufacturing plant. I can't remember how many years I put for, let's say 3 to 5 years for building that plant. Well, you have to buy all the equipment. You have to buy all the, the HVAC equipment, the reactors, all these different things to support the manufacturing. And I just put these 2 postings, one of them from coming here, but I just put some current delivery times of these different parts of, manufactured goods that go into production facilities. The main point here is that if you're waiting even when you place an order, you're going to wait 12 months for just getting some HVAC equipment, or you're waiting, a few months for these different pieces of equipment. These huge projects, things have to come in at certain times for you actually to build a facility. So the point is where we were used to having such short lead times in the past for these building these production facilities. Now the times are so long that even the plans that were laid out a year or two ago are expanding in terms of the timelines. And again, this leads to a continuing increased risk for actually capturing sales for this initial, or I'd say mid-2020s ramp of vehicles. And both, I would say, in the cell and manufacture and the materials side. So not just on the materials side, but also on the cell manufacturing side. When we talk about the workforce, this is another huge challenge, and there's been a lot of talk about it. The DOE, I know, has invested some money in this area. But how do you support the production of these gigafactories, for example? I just pulled two news releases here from McKinsey and from CNBC. But the main point here is to support the cell production. And again, I use cell production as really a way to step into materials. The way to support the cell production for a 40 gigawatt hour factory, you're talking 2,000 skilled employees. And if you talk about the upstream support for the materials, if you're going to do it in North America, again, you just amplify the amount of people that are needed to support that area. And the question is do we even have those people here in the United States or here in North America? And the answer is right now we don't have them trained for cell production, or mostly not for the materials production that needs to happen. So the question is, how do we do that? And again, there's been a lot of money that's been starting to go into workforce development from the government recently. The other question is not just saying how do we support that, but the time that it takes to actually build that workforce. So the training of this workforce for the cell and materials is going to take some time, which is another hindrance for us to actually capture, again, this ramp of cell and EV manufacturing in North America in the mid-2020s, sorry. So I think I'm about 40 minutes here. I'm going to just leave you with some of the things we're doing at PNNL to support some of these challenges. We do some work in the workforce area, but there's this new, as Vince said at the beginning, there's this grid storage launchpad facility that's coming online. We have that working on a lot of the long duration storage stuff, but it also supports a lot of our other battery manufacturing development work and validation. We also have a group called the Battery 500 group, which works on 500 watt hour per kg development. And that's really targeted at these kind of high power future electric vehicle cells that are going to be needed. And then we also have work in multiple different areas, whether it be on batteries or development for lithium-ion, lithium metal, sodium-ion, and a lot of the other energy storage formats, such as zinc. And I'm sure I'm missing a few of them. But so if you have any questions about our capabilities at PNNL or the work we're doing, feel free to reach out to myself or Vince. And with that, I'll leave it open for questions and discussion.
Thank you, Mark. And thank you all for bearing with us as we had some issues with the chat. And those of you that were able to pull it into Q&A, I think we've been able to assemble those questions. If you still do have questions, please go ahead and put those in the chat right now. But Mark, we'll get started. We had a lot come in. I think the first one was really around your slide 7, where you were showing the non-EV market and the EV market. And so the question is, you know, we kind of see an offset in the number of companies that are involved, a lot involved in the non-EV. Why do you see that difference? You know, why do we have so many in there in the non-EV versus who's working in the EV supply chain?
Sure. Yeah, that's a good question. I think the main answer there is the same thing I tried to really punch into this discussion, which is the size. So if let's say I wanted to make a company to support materials manufacturing for a non-EV segment, that means the capital investment I need is much, much smaller than that needed for a larger EV manufacturer. So again, if you're, I mean, you can just think about it. If you're a company and you want to get involved, let's say with making some cells for consumer electronics, you're talking maybe capital investment. Let's say you're going to make a material for them. You're talking capital investment in the millions. Maybe you're going to make a small production site in millions of dollars, and that's much more accessible for somebody to actually build a company or even a production site around, versus if you told me I got to go produce material for Tesla, well, I got to go make a factory that's on the order of hundreds of millions of dollars to support just one of those materials. And so where am I going to get the money from? And so I think that's why you see, and we didn't even talk about the margins as well. So the margins on these smaller, again, on these smaller goods, manufactured goods for the smaller cell, the non-EV space is much better. So again, business-wise, it's just a much better, easier fit for companies to come online there. And so you have much more operating in that space at a smaller size.
So do you see some of those smaller ones or are they actively trying to move into the EV market given that growth? Or is that a natural progression for a lot of these companies?
Well, I think that's a good question. I think a lot of it, if you ask a lot of those smaller companies, the answer is no, they don't want to get involved and they don't want to be competing. Again, you don't want to compete with an LG if you're going to start, and again, we're kind of I'm kind of blending the materials and cell production, but let's just say I'm a cell producer, a small cell producer in North America, and you ask me, do I want to get involved with producing for electric vehicles? The answer is definitely not. The margins are basically a lot of those companies are sometimes losing money, hundreds of millions of dollars just to be able to capture business in the 2025 to 2030 timeframe. So if I'm a small company, I've got decent margins on my kind of smaller product line, and you say to me, oh, you need to lose hundreds of millions of dollars to capture this larger volume. Plus, I don't even have the supply chains behind me and my upstream to support that volume. So the answer is no. I mean, a lot of the smaller cell manufacturers are not interested in it. Now, some of these larger, some of the larger chemical and materials companies are definitely interested. It's just that risk of, can I produce material long enough at a price point that makes sense? Like if I invest in this, it's really, that comes down to more of the offtake agreements, and can I capture offtake agreements that make it to de-risk it, those volumes.
Okay.
I jumped around a bit there.
So I think early on in your talk, you mentioned something about the mines are where they are, but is there an opportunity to expand or develop new mines in North America?
Yeah, definitely. Yeah. So so I think I'll just give kind of a layout, and it's probably a terrible layout, but we've got cobalt. There's some cobalt in Idaho. There's also a lot of, when we talk about mines, we also have to talk about the fact that it's not just one material that comes out of the mine, right? You have a lot of sub-materials that come out. But in general, there's some opportunities that's been people and companies have been investigating in Idaho for cobalt. There's the nickel belt up in Minnesota and Michigan. You see a lot of companies that are starting to investigate producing nickel up there. In fact, Tesla announced an agreement with one of those companies, I think last year or the year before, in terms of getting into the upstream there. And obviously a lot of copper that has happened within the United States. So yes, there's definitely mines that can be brought online or raw material that can be pulled out of the US, and I should say North America, because there's also, many people don't know this, but there's a lot of fluorospar or fluorine-based materials that have come out of Mexico. And so Cura, actually, one of the companies I showed on my plot, they're part of a larger company, Orbia, I believe the name is, that's out of Mexico, that has a large a fluorine production capability. And again, another opportunity for us to ramp that as well. So it's there. I think I didn't mention this, but it's really this size, right? I mean, it's, again, when we talk about electric vehicles, you just have to, it's just not easy for people to grasp how massive the quantities of materials are. I believe the nickel mines up in Minnesota and in Michigan, I think they would only support maybe 2 or 3 gigafactories. So it's like, even if you dedicate, and I think that's only for obviously for a certain amount of time. So you have to really think size. It's just, you're not talking about just having the material, you have to have enough of it.
So shifting gears a little bit, we had a few questions come in that talks about recycling.
Yeah.
So I'll kind of merge them together. One is, kind of what's the state of the industry now in recycling in North America? Where's it at? What's the maturity level? And then secondly, as we're focused a lot on NMC, cobalt and nickel. What happens as we're seeing the shift in grid scale energy storage to lithium iron phosphate?
Yeah.
More people are looking at phosphate. How does that really change the dynamic in that recycling?
That's a great question. So let's talk about the business. And if there's recycling folks online, I'm going to really generalize a lot of this. So it's not necessarily pertinent for all the recyclers because they all have their different business plans. But so right now, recycling in the US, or sorry, I keep on saying US, North America, really what it means, a lot of these companies have these novel hydrometallurgical or power metallurgical processes where they take in the black mass material and they pull out the nickel, cobalt, or manganese, and then they either sell that, they convert it to a salt and sell it to a cathode manufacturer, or they do it themselves. They make their own cathode material. Again, I mentioned Redwood Materials. Obviously, what one of their plans obviously is, or they're executing it, which is take the raw material that you're recycling and directly turn it into end-use material for a cathode, for somebody using cathode material. So I'd say, there's a lot. I want to make a point on the recyclers right now. So you see a lot of recyclers right now because the batteries, for electric vehicles won't be available, right, until the end of the 2020s, if that, so the size, they're waiting for those batteries to kind of come to end of use to be able to use them to make money. So if you're a recycler, how do you make money for the next 10 years? Well, you either make it on capital, venture capital or private equity that's going to support your company for that runway, or you do it with that and you team up with some of these factories, cell manufacturers that are coming online that are going to have high scrap rates when they bring up the factories. So you'll see a lot of companies, I think Life Cycle, I can't remember, there's a bunch of these other lithium recyclers that are actually attaching themselves onto these cell production facilities because, again, when we talk about gigawatt hours of production a year, if let's say you're even 2%, the factories when they come up are much worse than that in terms of yield, but let's say you're 10%, you're wasting 10% of that. If you actually go back calculate the amount of material that comes out of those as waste, it's just ginormous. Enormous. And so the recyclers a lot of them are really trying to get involved with those factories to take the waste off there initially and then ramp up taking the batteries off EVs eventually. The question on lithium iron, and the focus of the recyclers right now, it seems most of them obviously are these nickel NMC materials, right? And you also see there's a lot of innovations, it looks like, coming out in terms of recycling the lithium and the other materials. We didn't talk about the plastics or even the organics. There's a lot of organics that just in the electrolytes that are just burned off or just thrown away when we talk about recycling. So I think the current state is really focused on cathode high value material recycling. And I see a future state where we start to look more at these other materials that are just being discarded right now. Lithium iron phosphate is a tricky one. It's a harder one to recycle. Again, business-wise, does it make sense to recycle? Are you going to be able to recycle iron at a cost that's going to be cost competitive? Again, that's another reason why a lot of the recyclers are not doing these other materials. How do we get recyclers to actually focus on those materials and make business sense to actually do it? I think is one of the challenges we'll see.
All right, thank you. So keeping in that kind of vein of the future, what impact do you see solid state batteries having in that move? How does that change? Are we set up for it in North America, or is it something we'll follow a similar model, you think?
So I'm going to take that and kind of jump onto a different thing, which is solid state is an opportunity, right? Everybody talks about the North America leapfrogging Asia, the Asia cell producers in solid state. So first of all, you need to understand that most of the solid state work is not happening. Also, we have a lot of startups in the US that are doing it, but there's also a ton of work at CATL and these other large China and Asian firms. So I think for the United States, or I keep on saying that, for North America, we need to understand how do we pull these, and again, I'm going to talk about materials and cell in the same vein, but they're obviously different, but how do you entice companies to manufacture in the United States and ramp production? How do you get past that I've got a new novel material and I can make small quantities of it, and then basically have a big company that's not North America based come and buy, or how do we incentivize larger companies either to purchase these smaller novel material companies, or how do we incentivize them or support them through that valley of death of manufacturing? I think when I think of solid state, I think, yes, we have a huge opportunity. There's lots of intellectual property that is coming out in North America for that format. The question is going to be, how do we get it manufactured here, and what do we do to support that? So I know I kind of jumped off that question a little bit,
but following up on that, so I mean, we talked about kind of solid state as an emerging technology. Are there other new technologies, materials that you see really there may be a strength or stronghold in North America to produce?
Yeah, I mean, well, I'm just trying to think off the top of my head. I think some of these, again, it comes down to lithium iron phosphate. I mean, there's a lot of phosphate production that, I mean, it's not for batteries, right? We always talk about phosphates for fertilizers and these other, and obviously they're not up to the same specifications and stuff like that. But there's definitely lithium iron phosphate is a nice one from that state. That we actually have some manufacturing, even though again it's not catered towards the battery industry, and would have to obviously implement some changes there. But I think that's one that we could do. Obviously we have large lithium companies within the North America and South America. So the lithium format still, I think, makes sense for the North American market, but it's really that cathode side that is we got to figure out. We haven't talked about lithium sulfur. Obviously, a lot of interest there. There's a lot of companies that are starting to bring that technology into the market. There's a lot of challenges, obviously, with the sulfur byproducts that come off the cathode and deterioration of performance over time, but definitely that format as well. Lithium sulfur solid state battery would be an interesting play, and would be something that the North American market would love in terms of supply chain de-risk.
What do you see in terms of like silicon anodes and how that would move?
Yeah. So, well, I didn't mention, I always think of silicon when people say new technology. I think of silicon as old now, because I think it's you've got a lot of companies in the silicon space. I don't think I had all the silicon players on my chart, but I think that's a huge space where right now we have to think about how do we help these manufacturers of raw materials ramp. You've got companies like in the Northwest, Group 14, ramping production. You've got Sila, that's a cell manufacturer, but also ramping, silicon technology. Again, I didn't mention this, but a lot of the cell producers that are startups are also vertically integrating, because they have to be able to make their raw material, because nobody can make it for them. So I think silicon is one where I think we could actually have a large silicon market within the US. It's just a question of how we entice these companies and support these companies to ramp manufacturing. And fortunate for us, a lot of that's happening actually in where I used to work in Moses Lake, Washington. You've got, again, those two companies I mentioned, Sila and Group 14, both supporting production of some of the silicon products up there with REC, which again comes from my history of working in semiconductor. REC silicon makes the silane that's used to actually make the silicon product that goes into those batteries. So lots of opportunity in North America for silicon.
I'll ask you a question here, and it may be out of our purview, but I don't know. There was a question about whether you've been able to look at the Inflation Reduction Act and what potential impacts. I know I have not gotten through all of that yet. Trying to do it. I could not answer that question. So
yeah,
read it out if you need it.
Yeah, to be honest, from a materials production side, I can't remember what the restrictions are on the incentives. I do think there's incentives for, I know I remember one of the challenges, there was incentives for US manufacturing, and like in order to actually get some of the incentive for buying a car, I believe, or some of these other areas, was that it had to be a certain percent manufactured in North America or United States. I can't remember the details, but I think one of the challenges there is that I think that goes through 2025. So the incentives really are set up, as I recall, like in that early 2020s time period when we don't have materials production. So it's going to be a huge challenge to capture some of those incentives, I think. And again, I'm sure somebody will say that I'm wrong on this, but because of I'm missing the details. But I know I've heard different people in the market saying like that really needs to be extended out to incentivize like late in the 2020s when we actually can have materials come online.
Okay.
Yeah.
We're running out of time here. I'll ask one more and then we'll wrap up, and I'll apologize to the other questions that we haven't got to. If you need to reach out to Laura, or you can find Mark or myself's email on the PNNL website for that. So if we didn't get to your questions or you want to contact us directly, please do reach out in there. But the last question is, this is, been a really great analysis of lithium ion. What do you see moving to other technologies, especially in the non-EV space, as we look at it? And what do you need? What are the barriers to, kind of getting this level of analysis that we need moving forward?
So you're saying, sorry, so the question is like, what other areas have the same manufacturing challenges that we're seeing?
Yeah, I guess in lithium ion, I tend to think a lot of it is public and out there, who's joining who, what they're going after and stuff. And it may not be the same in grid storage, or there may be smaller players, things like that. So I guess as you look at taking this and applying it to flow batteries, or taking it to something else, I guess just trying to figure out, are there additional needs you need from the industry to be able to look at this, and how do we ensure that we have those supply chains set?
Yeah, I think that's a good point. A lot of the other areas, the other battery formats utilize the same raw materials or midstream materials. I think some of the challenges, when we step away from lithium ion into these other formats, is the fact that they're just tiny in terms of volume. So when we talk about flow cells, okay, you're talking much lower amounts of materials, and the strength of buying power for a flow cell manufacturer is like zero compared to a lithium ion cell producer. So I think, from my perspective, needs in terms of getting into these different fields for analysis really would be people to tell me the challenges. Most of my discussions are really just talking with companies and saying, what's your problem? And how can we, what analysis can we have that would help you support understanding the supply chain challenge better? So it's really just having, I love it when I get emails from companies just telling me what they're having problems with, and what we need to do as a national lab, or even as a government entity, to help support them. I think one of the biggest benefits from the national lab system that I've been part of and I've seen is really this market analysis and support, being a free resource for support on that.
All right. Well, Mark, thank you very much for your presentation, and thank all of our participants who called in and had some great questions here. But thank you for your time today. Great presentation. Laura, if we can bring up the closing slide here, I will close it out. And so I thank you again for all joining today. We do want to highlight some of the upcoming webinars that you are welcome to join. You can see where to register today. So on September 22nd, Emily Saldana will be talking about machine learning and how that impacts energy storage. Kendall Mongard and Vish Viswanathan will be talking about the 2020 Energy Storage Cost and Performance Assessment on October 6th. And then Jason Zong will be talking about silicon-based lithium anode batteries on October 20th. So we hope to see you there to join us for those. And again, once again, thank you for your time. And Mark, thank you again for an excellent presentation.
No problem.
Take care, everyone.
See you later.